sure Anna would love it if she could see your faces. So if you don't mind turning on your cameras, because we want this to be fun and interactive.
Okay, here.
All right. Well, good morning. Thanks everybody for showing up this morning, and special thank you to Anna for being with us today. Anna is a super smart, super fun, entertaining CPA who can really ensure that you get your taxes done correctly. So I'm going to let Anna just take it from here and share with us all of her knowledge.
Thank you so much. Hi guys, good morning. So I want to make this fun because I know taxes can be really boring, and I feel like my realtors who are my clients are the ones that like dread it the most. They're like, oh my gosh, tax season is coming. So I'm going to walk through some things that are key to realtors and give you guys some strategies, some advice. But I also want this to make it very interactive. So if you guys have any questions, raise your hand. I'm happy to answer it, because again, I think these conversations are just better and bring more value to you guys if we make them interactive. So I'll tell you guys a little bit about me really quick, and then we'll get started. So as Kathleen said, my name is Ana Klein. I'm a CPA that focuses in real estate only. So our clients are realtors, brokers, wholesalers, real estate investors, syndicators. We work with real estate in the real estate niche all over the country. So most of my clients actually are out of California, New York, Texas, and Tennessee. I'm trying to focus more on the Wisconsin market, but our firm is 100% virtual since day one. So everything we do is virtual, which obviously after, COVID, it made things a lot easier. So don't let that worry you. You don't have to like go to your CPA anymore. The biggest thing I will say is you need to find an accountant who knows what they're doing in your niche. So obviously here we are with realtors, but if your friend is into manufacturing, they need to find a CPA who is into manufacturing. Tax codes and loopholes and things like that are so different for every industry. So you need to make sure that you find someone who is knowledgeable in your industry. I don't know anything about restaurants, so I wouldn't take someone on who is a restaurant owner, because the credits for realtors versus restaurant owners are completely different. So I think we all come into the mindset of like, okay, I'm just going to go to H&R Block and I'm going to get my taxes done, which, trust me, H&R Block, TurboTax, and all of those ones suffice if you have an easy W-2 job. And maybe you own just your own primary residence. Those are very cost effective. I mean, they're like $200. You go in, you drop your stuff off, and you move on with your life. So that's perfectly fine. But once you start having your own business, the amount of tax strategies that you can implement, which we'll talk about, are so different. So I want to talk about the two services that you should be having with your CPA. First, also, I forgot, I dropped my Instagram on the chat. You guys can feel free to follow me if you want. It's very educational. I try to put a lot of content out there for education purposes. So if you guys want to, check us out, it's on there. So the two services that you should have with your CPA now that you are a business owner are tax preparation. That's an easy thing, right? You prepare your taxes, they tell you how much you owe, and you leave there having a peace of mind that things are done correctly. That is a great service, but it doesn't provide as much value as tax planning. And if you don't know what tax planning is and you're not doing that with your current CPA, that's the most important thing, right? We can sit here and talk about all of the politicians, all of everyone who says they don't pay anything in taxes, and we can be mad about it, but you shouldn't. The one thing that you should be doing is finding someone who's going to help you utilize the Internal Revenue Code to minimize your taxable liability legally, right? The loopholes are there. I use them and everybody uses them. So if you're just not utilizing it, maybe you just don't have the right person on your team for that. But the amount of loopholes, the amount of things that entrepreneurs can do versus somebody who's just has a W-2 job is insane. I always tell clients, if you are a W-2 earner and you don't have any investments, you don't have a side hustle, they're probably paying more taxes than we are. And as you've seen on the news, that's probably true. So tax preparation, one, but tax planning and having someone consult you is the number one thing that you should be having, that you should be looking for in an accountant, or it doesn't have to be a CPA, just an accountant in your field who's going to help you with that. So if you didn't know what tax planning is, again, the most important piece, it should be done before the end of the year, right? So a lot of us are used to just, okay, the end of the year is over. Now we're dreading getting all of our receipts and our financial statements done. And then you go to your accountant and you drop off the stuff and you're like, okay, help me out. There's no way to do any tax planning once the year is over. So the best time to do tax planning is the fourth quarter. So it's like October, November. Don't wait till December. I had like a client call me on 12/31 and they're like, oh my gosh, I have all this. And I'm like, dude, it's literally a day before the end of the year. It's like nothing we can do. So make sure you plan accordingly, because there is a lot that can be done prior to the end of the year that can minimize your tax liability. So you should really go into the next year knowing approximately, an estimate of how much you're going to owe in taxes because you had that tax plan call with someone. I think I get this a lot from new clients who are like, hey, I'm leaving my CPA. And I always ask clients, like, why are you planning on switching? Because once you have once you give them all your information, switching accountants is a pain in the butt for everybody, right? For you guys, for us. So what happens is I feel like people are not coming to the accountant and asking them questions about strategy. So they just go in, again, they give their paperwork, but then they're like, we're not getting that knowledge back or that advice back. And I think it's because also we have been accustomed to, we pay a fee for tax preparation, but we're not accustomed to paying a fee for tax advice. So I tell everyone, if a good CPA is going to work like an attorney, you're going to pay a good CPA for their hours for advice. So don't think that if you pay $200, which that is, again, really cheap, and we don't have to get into pricing. If you pay someone $200, they're not going to sit here and give you guys advice because they're just trying to get as many returns out as possible. So we also, as consumers, have to change that mindset that if we want to get the advice, whether it's from an attorney, whether it's from anybody else, it's usually by hour. So it doesn't work like realtors where, you guys just get a commission. It's really more hourly based like attorneys. But if we're going to save you $10,000 and we're charging you $5,000 or whoever, it's kind of like a no-brainer, right? So that's what I wanted to just talk about, the two services that you should be looking at as realtors. So if anybody has any questions on that, I'm happy to answer. Otherwise, I'm happy to move on to the next topic. I can drink some water. Sometimes I talk really fast, y'all. Okay, no questions. So let's talk about this. Tax planning is great, right? We're going to sit here and plan our life away, minimize our tax liability as much as possible. But the number one issue that I see with clients all over the board is their record keeping. So if I can't come to you and ask you, hey, what do your numbers look like as of today? Like, you should know what your net income is as of February 16th, every single time your accountant asks you. Because if we have a conversation and you don't know what that is because you're saving your receipts in a box or you're just waiting for the end of the year, we're just working on hypothetical numbers, and garbage in, garbage out. I can give you as much advice on hypothetical numbers, but we really want to know, are you married? Do you have a side business? Does your spouse do this? Like, we need to know your entire financial situation at one point in time. And that seems to be the biggest issue with clients, which I understand. Having to sit down and add all your receipts can be a pain in the butt, but that's why systems are great from the beginning. So I'm going to share with you guys a couple of apps that my most successful clients have and utilize that allows us to do really good tax planning, because we can sit down and say, okay, as of today, you're netting 10K. Okay, this is what we need to do. And we can make projections on the year, which is a good thing. Also, for all you guys understand that, you work with lenders. So if I have any lenders on here, I mean this the nicest way possible, but they're the worst because they ask for literally everything. They literally want to know so like everything about your life. And then they ask for like financial statements. So if you're waiting till the end of the year for lending, for accounting, and you don't even have financial statements, like your lending, if you want to buy an investment property, is not going to work, especially if you're just starting in as an entrepreneur. They're going to want 2 years. So you'll hear me talk about accounting, about your bookkeeping all the time, because that's the foundation to making you a successful tax strategist with your CPA. So number one, miles for my realtors are huge. And we'll talk about the difference between miles and, everyone talks about buying these like luxurious cars. So miles are huge for realtors, in my opinion, because you guys drive a lot. So there's apps out there like QuickBooks does that. There's also an app called Mile IQ. Literally, you hop in your car as soon as you're driving, it just starts keeping track of your mileage. So at the end of the week, when you're sitting down doing nothing, just swipe right or swipe left, and it'll go like business or personal. And we're gonna need those records in case of an audit. So for tax purposes, you get to deduct either your miles on your car or new car. So for example, everyone talks about like, okay, I'm going to buy this car, like a G-Wagon or a Tesla, because it's over 6,000 pounds and I'm going to be able to deduct the whole thing. Absolutely. That is so true. And this is the last year that 100% bonus depreciation is going to be allowed, unless the Senate and Congress passes all these things. So I don't want to get into politics at all, but when you start being an entrepreneur, you really need to pay attention to who you're voting for, because it will affect these things, right? So the bonus depreciation that I'm speaking on has to do with people who are like, let's say a Tesla. Those are very popular. They're over 6,000 pounds. And what do? You go and buy a Tesla for $120,000 and you're able to depreciate and deduct the entire thing that year. So for example, let's say you net $300,000 and you're like, and we're having this conversation on October, and I'm like, you're like, I've been really wanting a new car and I can afford a Tesla. You go buy that Tesla and we bring down we literally take a write-off for $125,000 against your income. Now, that's a great thing, but what happens next year when you're netting even more, right? So this is why I say like tax planning is really important, again, because we'll take a write-off this year for $125K, but what happens next year? Do we just continue buying Teslas? So those are the two differences between cars. Someone asked about a lease. I'm a fan of leases. I lease my car. I love leases, I think people maybe, I don't know why they don't. I think if I didn't have my business, I wouldn't lease, but since I can write it off, I rather lease. As a lease payment, you're not allowed to depreciate. So your option is only either mileage or actual lease payments and anything else above that. So like gas, repairs and maintenance, car washes. So it really depends what you like, what is, again, planning, like, what do you like, right? Can you write off the amount you pay in cash versus finance? This is such a great question. So it doesn't matter if you show up to the dealership with $5,000 down and the car is $100,000. You're going to be able to deduct the whole $100K. So personally, like rates are so cheap. Literally they're printing out money that if I had to go buy a car and I only have to put $5K down, I'll just do that. And then I'll take my money and buy an investment property, right? So you don't have to pay it off right away. And it doesn't have to be brand new. That also changed when the Tax and Jobs Cut Act came in, when we had more of a Republican Congress and president and everything. They said before it used to be only if it's brand new. Once that happened in 2018, it was like, it doesn't matter. As long as it's new to you, you'll be okay. Again, that 100% depreciation this year is the last year. So this will be the last year that you are going to be able to take that deduction, unless again, they extend that, but I don't know what's going to happen. So if you guys have any questions on cars or leases, I'm happy to talk about that. Okay, so we talked about cars. Now we're going to talk about how to keep track of your expenses. Realtors can make a lot of money really fast, right? Because it can go from 0 to 100 in a month. So the biggest thing is making sure that you have record keeping. The one that I tell my clients to use all the time is QuickBooks Online. I think it's like 25 bucks. you should have a different bank account, and we're going to get into LLCs in a second, but ideally in the perfect scenario, you would have its own bank account and you would link that bank account to that software, and the transactions just come through as you go. So essentially what happens is, let's say you, I don't know, go out to coffee and take a client out. That would be meals and entertainment, or meals, I'm sorry, which that's 100% deductible this year. All those transactions just get categorized. So if you stay up with it, there's an app for it every week. Like I said, just like with your mileage, if you stay up with it every week, you should have a really good understanding of where you're at every single month. Of course, realtors get paid, once the closing happens, but you already know how much money's coming in, that we can make those adjustments. But again, having good expenses is the best. I mean, having good record keeping for your expenses is really going to help you. We get into like receipts. Everybody hates receipts, right? Like if you are still showing up to your accountant with a box of receipts, like God bless that person that's like doing that for y'all, but like that's not how it's done nowadays. We don't need the receipts. So as an accountant, we're not auditing you. That's why you sign that engagement letter. That engagement letter, if people actually read it, essentially just kind of CYA me, because it says, hey, I'm believing what you're telling me. At the end of the day, if an audit comes back, you as a taxpayer, so no matter if I sign it, I think that's a huge misconception that a lot of people have. Just because I signed the return does not mean that I am responsible for anything that has to do with you. Of course, I have a fiduciary responsibility to make sure that if you tell me you bought a Ferrari when you're only making $10,000, I'm going to obviously question that. But I don't know how much money you spend in meals. I don't know how many miles you drove. So you're telling me. So in case of an audit, those receipts are for you to prove to the IRS that you did it right. We'll talk about audits too, but again, the receipts are credit card statements do not suffice. So if you just think that your credit card statements are going to tell the IRS that you went to Home Depot and you spent $10,000 somewhere, like, I don't know that you spent that 10K. Was it at your house? Was it an investment property? Like, how do I know? So really what I do is I have an email completely separate from my business that's just called akkreceipts@gmail.com. And every receipt that I have, I just send it there. I take a picture of it. I send it there. And in case of an audit, which I hope it doesn't happen, it will be there. For meals and entertainment, that's probably a very abused expense. I'm not saying that we do it, but I'm sure everybody abuses that expense. The biggest thing, I've been through audits with the state of Wisconsin, and the biggest thing that they look at is making sure that the receipt says who you were with. So every time you go out with somebody, make sure that the receipt, in the back of the receipt or in the front of the receipt, you just say, okay, I was with John and we talked about 445 West, whatever it is, a short description is there. Now, I know this is really like getting into the nitty gritty of what it should be, but you guys have to understand that in the IRS, you are guilty until proven innocent. It's not like the criminal justice system. Like if you were to get audited, you're guilty until you're proved to the IRS that it's correct. So for me, it's like, if I can have as much receipts behind what I'm doing, I'm happy to do it. It takes 2 seconds. Again, once you get into the habit, it's good. And once you're really busy where, maybe you have agents underneath you or things like that, then it's necessary probably for you to hire like an assistant, a VA that's going to help you with all of this, because that's just not something that you have time to deal with, Okay, I'm going to answer some questions before we get too far. So about the 6,000 pound, we're going to go back to the cars and the 6,000 pounds. So in order for you to depreciate the entire thing, it has to be over 6,000 gross. I can't remember, but yeah. So like my client just bought like a brand new Escalade, and the dealer kept telling him that it was only like 5,600 pounds. But if you research it, I'll look for what that acronym means, but it was like gross something weight. It was like 6,100 pounds. You can still deduct a car if it's not under 6,000 pounds. You're just not going to be able to write off the entire thing. So that's why people go and get these big cars that are over 6,000 pounds, because we can actually depreciate the whole thing. In regards to the cost segregation last year, do I mean 2022? I mean, this year is the last year that I'm sorry if I misspoke, but this is the last year that, thank you, Jason, gross vehicle weight rating. Yes. So before you buy a car, literally just Google what it is and it will tell you what the GVWR is. But back to the full depreciation, this is the last year that it will be able to be, as in 2022. Okay, so let's talk about QuickBooks Self-Employed and the different type and the other ones. So QuickBooks Self-Employed, I don't recommend it to my realtors because you guys grow so fast. And once you grow so fast, we're going to need other financial reports. So I say skip the $7 version and just go into the simple version, which is like $25. Don't start with QuickBooks Self-Employed. But I mean, if you want to, that's fine. But it just doesn't give you, I'm going to need balance sheet. I'm going to need like P&Ls, and I just don't like QuickBooks Self-Employed. What if things are auto-billed on your credit card? Yes, so that's totally fine, but I'm sure you signed a contract or you get a receipt from the vendor. Again, just forward that receipt into your receipt folder. Can you write off a meal if it's with a team member? So here are the rules for meals. Meals need to be necessary and ordinary. So if you're with a team member, I'm sure you are talking about business, right? So yes, I mean, we'll get into LLCs, but this is how amazing being an entrepreneur is, because for example, my parents are on the board of my company, right? Because I'm an S Corp, they're on the board of my company. So if we were to travel, you know, every year we do like a retreat to talk about my business, they're on the board. Legally, I have documents that state that my parents are on the board. So if we travel, that is proof that I have them as a deduction, because we are on a retreat to talk about my business and they're the board members in my company. So like I said, just the amount of things that can be done, as long as the proof is there, you know, it's great. In some cases, you know, it could be your spouse, it could be, depending how old your children are, you can have them on there. So when you start taking trips, you know, you can deduct those trips as well. Wave, I've never used Wave, Paula, but I think a lot of people do use it. All I'm looking for is a profit and loss statement and a balance sheet. If Wave doesn't do that for you, then I would say no, but I'm sure it works. All right, so I think we kind of talked about like deductions and the accounting and how important it is. There isn't a list of deductions that a lot of people ask me like, oh, can you send me a list? Like there really isn't a list, right? There isn't like a specific list that says, okay, you can deduct this, you can deduct this. What I always tell clients is if it's ordinary and it makes sense for your business, you can write it off. The example I always give is I say, okay, so for example, when I travel for events, maybe now I'm traveling first class instead of like sitting all the way in the back, like when I was young and I couldn't afford anything. I'm like, all right, whatever, like I'll just pay for first class because I can afford it. So that's fine, but I'm not gonna go to this event in Denver and rent like a Ferrari and say it was a necessary expense. Like that's where like it's extreme, but I hope that you guys understand kind of what I'm talking about. I do have clients that write off their Ferraris. He's a YouTube star, so you know, it's a prop, but again, it's like so much work. Oh, the home office deductions. So I love that question, Laura. Thank you so much. I don't know who told people that those deductions were like so big. They're like the smallest deductions ever. And people get so caught up on these deductions. Essentially, there's a better way if we become an S Corp to give you a way better deduction. So this home office deduction that everyone just gets like, oh my gosh, I forgot my home office. I'm like, it's giving you literally $300 deduction. It's not that big of a deal. When you become an S Corp, I can probably guarantee you that we'll be able to give you probably a $10,000 home office deduction. So in the meantime, we'll talk about that. It's essentially what you do is you need to have a specific room in your house or your apartment. So I live in an apartment and I literally work off from my kitchen counter. That's not going to qualify as a home office deduction. It has to be a specific room that you use for your office. Then what happens is you take a percentage of the square footage of your home office versus your entire property. And then you start taking that percentage for your mortgage interest, for your utilities, for your water. Again, if you really look at it and you look at that, it's really not that big. So, but it's there, right? And you should take it. Okay.
Question quick on the home office since you're on it. So we're thinking about converting a dining room we've never had a meal in into a office. Would the desks and things like that be part of the deduction as you're setting it up?
So the supplies are, so like, let's say you do have a desk and you buy things for your office, that's fine, but you're not going to be able to take that home office deduction of the percentage because it's not a room. It's just, I mean, yes, and it's hard to say yes. Like if you're literally taking that room, it doesn't have a door though, does it?
I'll put one.
Okay, get creative. Exactly. So you can get creative and yes, put a door. I mean, is this going to be like an audit thing? No, but we want to also make sure that we don't want to push the envelope, you know, and with the audit. So did that answer your question?
Yes. Yeah.
Okay. Well, we're talking about audits right now. Let's talk about the fact that we've been lucky that the IRS had no money. Well, lucky, I would say it's a double-edged sword because try calling the IRS and good luck with that. If you still haven't had your tax process from last year, I looked last week and they were like, I think it was like maybe like 500,000 returns that have not been processed. I think it's more. I put it on my Instagram. So it's like, they have no money. It's a mess over there. So it's been good because, you know, a lot of people haven't been audited, but now there's been a lot of, money has been dispersed that way. So what they're looking to do is go back to what 2010 looked like. If anyone knew 2010, or you probably know someone or more than one person who's been audited. So when I talk about this, it's like, make sure, I don't know if it's going to happen or not, but like, just make sure like you know, cross your T's and dot your I's when it comes to things like this. Okay. So let's talk about LLCs. Those are like everyone's favorite thing. All right. So in the state of Wisconsin, first of all, I'm going to just say that I'm not an attorney, so do not take any of this advice to heart. You should speak to an attorney about this, but I'm going to give you my opinion as a tax preparer. Is an LLC needed for you to start deducting things? No. You can tomorrow start a new business and not have an LLC and go on your merry way and start a business. LLCs are for asset protection only. That means that if you don't have an LLC, you don't have a barrier between your personal assets and your business assets, or, you know, whatever. However, there's insurance, there's all these things. So in Wisconsin, it's $26 to have that annual LLC registration. And maybe you get with an attorney and maybe it's $500. Do it. Do not sit around and wait for someone to tell you that you need an LLC. It literally is less than $1,000. Go talk to an attorney and get an LLC. My clients from California, completely different story. It's like a shit show over there. Like they have to pay $800 a year minimum for any LLC. That's when I would say, let's see if we need it, right? In Wisconsin, I think it's a good idea. Talk to an attorney, get your LLC. That's going to allow you a couple of things. Number one, I always look at it this way. It is so good to have two different bank accounts, one for your personal and one for your business. Once you get that LLC, commingling funds and everything you've been doing because you're like, oh, I forgot, like, oh, I'm using my personal, not happening anymore, right? Like you need your business owner, start thinking like one, and you are going to be two different bank accounts. So you have your business account and you have your personal account. Everything is going to run through the business. You have a different bank account you can utilize for QuickBooks, all those things that we've been talking about. The biggest thing when it comes to this is how, when we get to the point of taxing you guys as an S Corp. So let's go over the difference between what an LLC for taxation purposes is going to do versus what an S Corp is going to do for you, and how 99% of my clients are S Corps who are realtors. So when you start being an entrepreneur, any net income that you make, you are going to be taxed at 15.3%. That's your self-employment tax, right? That is the FICA, Social Security, Medicare that I don't know if we'll ever see, but we're paying for it, right? So right now, if you were a W-2 earner before, when you used to get a paycheck, let's say you made $10,000 and you only got like $7,000, right? Your employer paid half of that 15.3%, and then you paid for that. Now that you're an entrepreneur, you pay the entire thing. So that's in addition to your ordinary tax rate. So let's say you are married and your spouse is over here making 200K at her W-2 job. You come over here making 100K, you're going to pay 15.3% on your 100,000. And then we're going to combine all your income at 300K and you're going to pay at least, I think it's like 35%. So that's 35% on top of the 15.3%. So you're literally throwing money away with the self-employment tax, right? What we want to do is minimize that. We can't get rid of it, but we're going to minimize that. Now, if anyone in here is a real estate investor and actually has properties, which is what, you know, I want to have my clients do, rental income is not subject to self-employment tax. So that's really nice because it's just subject to your normal ordinary tax bracket. Any other activity like me being a CPA, attorneys, anything that's like that, you will pay that 15.3%. So what we want to do is we want to minimize that, not avoid it, but minimize that. And the way that we do that is by creating an S Corp. So an S Corp, you don't run around and tell people like, oh my gosh, I'm an S Corp. Like nothing changes. It's literally just a taxation, the way that we are taxed. You will still be an LLC. You'll just tax as an S Corp. The difference here is that the net income is not subject to self-employment anymore. So let's say you were making 100K as an LLC, you're paying 15.3% on that. We move you to an S Corp and guess what? That 15.3% is gone on the net. However, there's a lot more requirements when you have an S Corp. Number one is the IRS, of course, wants their self-employment tax and they're going to get it one way or another. And the way that they get that is by requiring any S Corp owners to have payroll. So now that you're an S Corp, you're going to become an employee of your business and you're going to pay that self-employment tax on your wages. We're going to make that reasonable. We're not going to make it crazy. So you're, instead of paying 15.3% on the entire thing, you're only going to pay 15.3% on that W-2 wage. So that's, you know, where all the planning comes around. But it's a requirement. Okay. It's a requirement because they want to see that. Another requirement is that you need to be an American citizen or resident. So any of my clients who live in Europe, I have one in Australia, they can't do that. They are stuck with that and it's fine because let them pay for it. You could only have 100 shareholders. It's a lot more complicated. So when I tell you guys that if you see someone saying, oh, I did my own S Corp, I started my operating agreement, like 95% of my clients don't even have an operating agreement. And when I tell you that I have an operating agreement where my parents are board members and things like that, that's how things need to be created. It's not just you go on LegalZoom, you get an LLC and you just go on your merry way. Like there are a lot more requirements where you're an S Corp. You have to hold board meetings. You have to have annual meetings. So there's requirements, but again, once you get to the process and you have a really good CPA that walks you through this one time, you should be good to go. The other thing is that the wages, what was I saying about this? Reasonable compensation. Someone asked about like, how do you determine the correct wage? So great question. We run reports. We have reports. We pay for a software that allows us to come up with a reasonable compensation. So again, when I talk about getting with a consultant CPA, you're not going to get all of this. And I don't want to talk about money, but I want to change your mindset that if you're so used to just going to H&R Block and paying $200, it's not going to happen, right? Because now we need to make sure that we know how much money you're going to make, how much is your W-2 should be. And, you know, there's costs associated with that. But if we're saving you money, it's like, you know, kind of return on investment. So there isn't a way that you can determine it. Because you, for example, a bad example would be if you are making $1 million, like say let's say you're netting $1 million and you're only paying yourself 100K. That's not going to fly, right? Because and you're just taking draws. So you're only doing 100K on the W-2, but your draw account where you're just taking money is at like 500,000. It's not going to fly with IRS. And in the tax return, there's a specific line item that says owner's compensation. So when they run the stuff through their machines and it starts saying 0, guess where they're going to hit it? can guarantee you that this is the #1 place they're going to start with audits, because I would work for the IRS if I could do this, because if that line item on an S Corp says 0 and I see a net of $700,000, boom, audit right away. And what happens when you don't have reasonable compensation? You lose your S Corp status for 5 years. And you have to go back and pay all those penalties. They're like, oh, no, sorry, you're not an S Corp. We're going to tax you as an LLC. You owe me all that 15.3%. And it's been 3 years. So I'm going to tag on all the interest that you haven't paid. So, I mean, I'm sure you guys have gotten letters where you're like, oh my gosh, I owe 10K and I'm paying like, it's more expensive than the bank. So if you don't like to give your money away, make sure you have proper consulting. Okay, I'll answer Paula's question and then we'll go to Laura's question. So a partnership, again, I can't stress enough, you guys, how important it is to talk to an attorney or a CPA about what legal entity you should be. That has been the #1 issue I've had this tax season. Usually the #1 issue I have is bookkeeping. Like, people are just horrible at it and I'm like, I'm used to it, it's fine, nobody wants to do it. But the amount of partnerships that people have been creating that are not even, I'm like, why are you creating a partnership for what? For what reason? Or they're not creating partnerships when they need to, is because they don't want to spend the money with an attorney. So a lot of people throw out the name joint venture, right? Everyone's like, oh, I got a JV with like Paula down the road. And like, okay, joint ventures are BS. Legally, it's a partnership. You are doing business with somebody else than yourself. When you are taxed as a partnership, you need to have an operating agreement, because what happens when Bob down the road gets married and his wife hates me and we have this brokerage that's amazing and she wants to take all my money? Like, it's like, I'm saying this because it happens all the time. You have nothing in writing, but you thought this JV, I don't know, it just like sounds cool that you have this like, oh, I have a JV with like Bob. Like, it's not about like sounding cool. It's like, do you have something in writing? Because something could happen. So partnerships, I don't recommend them unless for tax purposes, because you're taxed at 15.3 no matter what. There is ways that we can create. I have clients who, you know, they get together, they form a partnership, but then, you know, we have the LLCs be the owners of the partnerships, and then those LLCs are taxed as an S Corp. So there's ways around the self-employment tax, but if you're just forming a partnership, all the net income will be at 15.3%. Again, in addition to whatever your other income is, whether you're married or not married. Great question about when is it a good idea? What's the net for you to have an S Corp? I say to clients, anytime you're netting between 35 and 45,000, you should be having a conversation with your attorney or with your CPA. And the reason why I say that is because around that is when you'll see the return on your investment. When you guys are having an S Corp, there's 2 tax returns now. So you have your personal return, and then we have an S Corp return. I will tell you what the average S Corp return with a good CPA will be, and then I'll give you the cost of everything else you need to run an S Corp. An average S Corp, an average partnership, an average corporate return with a good person who, I wouldn't say good, with the people that I like, my colleagues here, not New York, but like in Illinois, I can think of Tennessee, it's between, I would say $2,500 to $3,000 for a good S Corp return, right? So now we're adding, let's just say $2,000 for an S Corp return, in addition to your personal return. I don't know what your personal return is like, but average I'm seeing $500. So now we're at $2,500 just for tax preparation. That doesn't even include tax planning. So maybe we're looking, I would say between $3,000 to $5,000 that you're spending with your good attorney and a good CPA. That's a good chunk of money. So we need to make sure that you're getting your return on investment. So at between 35 to 45,000, you're going to start seeing a huge tax savings when you become an S Corp. So when we look at your return and we're like, hey, who asked this question? Laura, you're saving $25,000, but just so you know, your fees are $5K. To me, that's a no-brainer, right? So, but if you're at 10,000, netting 10,000, and I'm charging you 5,000, it's not worth it. So you need to make sure that you get your return on investment. Jason asks about using a tax ID number or your social security. I always say just start with a tax ID number. That's why when you guys get started being brokers or are not there, getting a tax ID number, getting that LLC is key. If my husband and I file jointly, with the S Corp hinder that? That's a very, it depends question. I mean, you're adding, yeah, I can't answer that, Mary Beth. It's kind of hard because it's going to be on your situation, what's important, like how it affects. So sorry, that's just very specific. The S Corp thing that I'm talking about, I know that I'm rambling a lot and it's like a lot of knowledge your way, but at the end of the day, you guys, it's honestly a really great idea. If you have not had this conversation with your CPA and you're netting between 35 to 45,000, I can guarantee you that you're overpaying to the IRS. And I don't want you to do that, right? That's why tax planning is great. But I go back to my first topic. If you have no numbers and you have no idea where your finances are, how are we supposed to help you? So when I ask my clients, like, why are you leaving? I always say there's three sides to the story, right? Like their story, the CPA story, and then the real truth, right? Like 95% of the time I will say, it's the client's fault because A, they don't want to pay for the services or they don't have the finances. And I get it because we're so busy. But when you get to, I guess at the end of the day, I say, if you don't take your business seriously enough to know how much money you're making, don't expect anyone around you to do that. And that's just how I'm like, I'm just really honest. And it's like, if you don't care, like, why would I care? Right? Like, I'm not, your CPA is not going to call you and say, hey guys, so like, what's new? Like, do you want to know? It's like, if you think that there's something that we need to talk about, schedule a call, let's get on a call and let's figure out how we can minimize the tax liability as much as possible. Does anybody else have any questions about S Corps or anything like that? Okay. The other thing that I wanted to talk about is that's really actually all I really wanted to touch base on. I think that, I mean, I can really go into detail about more tax strategies, but it's just, it will open a can of worms for everyone. And I think that everyone's situation is different. So I think for me, it's always like, number one, finances, make sure your bookkeeping is up to date. Number two, find a really good CPA who you are having conversations more than just once a year. And then number three would be tax consulting. Like that is key. So, but again, the foundation to this is making sure your finances are not perfect, but you need to know how much money you're making right now. And like, if I ask people around here, like raise your hand if you know how much money you made this like last month, I would love to see how many people, you know, actually know that. Like, it's hard. I get we're so busy, but it's the biggest thing that I take away is like, we complain about other people not paying taxes. And you always hear like, well, you know, Bob got like a new car. How does he afford it? He pays no taxes. It's like, either he's doing something shady or it's like he's having conversations with a CPA about the tax law is there for you to play with. Like it's there, it has the loopholes. It's been written years and years ago. It didn't just start when Trump came or when Biden came, like it's been there. So the biggest thing is making sure you have someone on your team who's going to help you utilize that. Just like we hire you guys, right? Like I have a realtor to buy my properties. I'm not going to pretend I know what I'm doing because I don't want to. So like, I'm happy to pay that commission to my realtor so that that person can do what's in my best interest, just like you do for attorneys, title, things like that. So that's all I have to say. I mean, I could ramble on forever, you guys, but I'm not going to bore you. Oh, Caitlin, such a good question. Again, if I have lenders on here, like no offense, but like I hate them because sometimes they don't get it. Okay. So if you're an LLC and then you switch to an S Corp, is that going to reset your 2-year mark? You know, lenders are always like, oh, we need 2 years. If you have a good lender, I have seen good lenders because you go, it's the same niche, right? You're a realtor, you're just literally changing the taxation. They won't care. I would say if you work with someone who doesn't know what an S Corp versus an LLC is, they'll probably be like, oh no, you have to start over. But these are conversations we would have, you know, on our tax plan call, because what if your goal is to purchase a house next year and the lender you're working with doesn't know anything about this? We're not going to go make that switch to an S Corp until you figure out a lender that's going to work with you by making that switch. Oh, see, Abby, thank you. I just did it in 2021 and they didn't care. Yeah, so it really depends on your lender. If you're really like starting a brand new business, I think that's the biggest issue. So if you're just moving from an LLC to an S Corp, that's good. So Abby can share her amazing lender on here if she wants to, because they're not all great. That's it, y'all. I don't have anything else. If you guys have any questions or anything, like I said, our Instagram is like, we try to educate clients as much as possible. And I hope this was some valuable and not too boring. So people are asking if we're taking new clients. We literally have like 20 spots left, and it's not to say like, oh my God, run work with us. But yeah, we don't have a lot of spots left. So if you are interested in working with us, the best way to get in touch with us is head on over to our website. There's a questionnaire that you fill out to make sure that, you know, we can work together. And then we're not even taking like calls right now. We're like booked literally till after March. So we just get, if you want a quote, that's where we're at, which I hate that. I hate that it's about quotes, but at this moment, we're like, what's your situation? Here's the quote for your price. Do you want to move forward? For any tax consultations, I think that's where the best value is. We're not doing those till after April 15th. So the best way to get in touch with us is via our website. I'll put in my Instagram again. We are almost at 10,000, you guys. So if you guys can do me a favor and like go and like it, I'll be so happy. We're really trying. All right, I think that's all I have.
Thank you very much.
Guys, any more questions for her before she jumps off? All right, well, thank you so much, Anna. Would you mind if I shared your contact information with the team?
Yeah, of course, that's totally fine. Just patience, please. Like I know we are taking a long time to reply back, but it's a little bit crazy and my staff is like so busy. So it's tax season, y'all. So give us patience.
Yeah, of course. Well, thank you so much again. We really appreciate everything that you've done for us.
Thanks, guys. Have a great rest of your week. Bye.